Making money while you sleep isn't a fantasy, it's a strategy. Passive income builds wealth without trading hours for dollars, giving you more freedom to live on your terms. The right investments don't just add extra cash, they create long-term security. A recent survey found that 36% of Americans already earn extra cash on the side, yet many still rely entirely on a paycheck. Inflation keeps rising, job security is never guaranteed, and having only one income stream is a risky bet. This video breaks down the best ways to build passive income now. Stocks, real estate, digital assets, each method has its own benefits, risks, and earning potential. Some require money upfront, others just take time, but all of them help create financial freedom. Also, as a chartered financial analyst, I want to add that I am not endorsing any of these. In fact, I would advise against a few of them. But if your goal is passive income, then the following strategies may work for you. Check out the full details by visiting the link in the description. Number 1. Dividend stocks. Investing in dividend stocks means owning shares of companies that reward you with regular cash payouts. These aren't just any stocks, they're issued by well-established companies with a history of profitability. Instead of waiting years for a stock's value to increase, you earn money just for holding onto your shares. Think of it like getting a bonus check for simply being an investor. The best part? Reinvesting these dividends allows your earnings to snowball over time, creating a cycle of growing returns. Start small, focus on companies with a solid track record, and watch those payouts add up year after year. Number 2. Real estate rentals. Owning rental property is one of the oldest and most reliable ways to generate passive income. A well-chosen property can bring in monthly rent that not only covers your mortgage but also adds extra cash to your pocket. The key is choosing a location where demand is strong and tenants are reliable. While managing a property takes some initial effort, hiring a property manager can turn this investment into a nearly hands-off income stream. Over time, rental income can increase as property values rise, making it a powerful wealth-building tool. With the right strategy, a single rental property can be the first step toward financial independence. Number 3. REITs, real estate investment trusts. If the idea of being a landlord doesn't appeal to you, REITs offer a way to invest in real estate without the headaches of property management. These companies own and operate income-generating properties, from apartment complexes to shopping malls, and distribute profits to investors through dividends. Buying shares in a REIT is as simple as purchasing stocks, but the returns often come with the stability of real estate. It's a great way to enjoy the benefits of property ownership without dealing with tenants, maintenance, or unexpected repairs. Plus, some REITs focus on sectors like healthcare or technology, offering a diverse range of opportunities. Number 4. High-yield savings accounts and CDs. Not all passive income requires risk. High-yield savings accounts and certificates of deposit, CDs, provide a low-maintenance way to grow your money while keeping it secure. Online banks and credit unions often offer better interest rates than traditional banks, allowing your savings to earn more over time. CDs require locking in your funds for a set period, but they usually come with higher returns than regular savings accounts. While these options won't make you rich overnight, they provide steady, predictable growth with zero market risk. For those looking for a reliable place to park their cash, this is a no-stress way to earn passive income. Number 5. Peer-to-peer lending. Instead of letting banks handle all the lending, peer-to-peer, P2P lending platforms let individuals loan money directly to borrowers and earn interest in return. It's an opportunity to act as your own bank, funding personal loans, small businesses, or real estate projects while collecting passive income. Returns can be higher than traditional savings accounts or CDs, but there's always the risk of borrower default. Diversifying across multiple loans reduces that risk, making P2P lending an attractive option for those willing to take on moderate risk for potentially strong returns. With platforms automating most of the process, earning interest on your money has never been easier. Number 6. Index funds and ETFs. For those who want to invest in the stock market without the stress of picking individual stocks, index funds and exchange-traded funds, ETFs, are the perfect solution. These funds spread your money across hundreds of companies, minimizing risk while still offering solid returns. Index funds mirror the performance of major stock indexes like the S&P 500, while ETFs provide a more flexible trading option. Both are designed for long-term growth, making them a favorite choice for passive investors. Once your money is in, there's little to do but watch your investment grow. With consistent contributions and time on your side, these funds can generate wealth with minimal effort. Number 7. Selling digital products. Once a digital product is created, it can be sold over and over again without additional effort. This is why ebooks, online courses, printables, and stock photos have become popular passive income sources. Unlike physical products, digital goods don't require storage, shipping, or ongoing maintenance. Selling on platforms like Etsy, Gumroad, or personal websites allows creators to reach a global audience without dealing with inventory. The hardest part is putting in the initial work to create something valuable, but after that, sales can roll in indefinitely. It's a smart way to turn skills or expertise into an income stream that works around the clock. Number 8. Bond funds. Investing in bond funds means earning steady returns without the roller coaster of the stock market. These funds pool money into government, municipal, or corporate bonds, providing regular interest payments. Unlike individual stocks, bond funds focus on stability, making them a solid choice for passive income. Returns usually fall between 3% and 5%, but the lower risk makes up for the modest gains. Investors looking for a predictable income stream without daily market drama often rely on bonds as a foundation for long-term financial security. With automatic reinvestment, even small returns can compound into something meaningful. Number 9. Automated investment platforms. For those who prefer a hands-off approach, automated investment platforms handle everything. These services, often called robo-advisors, manage portfolios based on personal preferences and risk tolerance. Algorithms rebalance accounts, reinvest dividends, and ensure investments align with financial goals. The best part? No need to watch charts or study market trends, just deposit money and let the system handle the rest. Fees are typically low, and returns can match traditional investment strategies. This method works well for anyone wanting passive growth without spending hours researching stocks or funds. Number 10. Writing royalties. Creating a book or an online publication means generating income long after the initial effort. Authors who publish through platforms like Amazon Kindle, direct publishing, or traditional publishing houses receive royalties each time a book sells. The right topic or niche can lead to steady monthly earnings without constant promotion. While the upfront work requires time and effort, well-written content continues selling for years. Those who love writing can turn their knowledge, experiences, or stories into a lasting income stream, proving that words can work just as hard as money. Number 11. Investing in precious metals. Gold and silver have held value for centuries, making them a go-to choice for those seeking financial stability. Unlike stocks, which fluctuate daily, precious metals offer long-term security. Investors purchase bullion, coins, or ETFs backed by physical gold to hedge against inflation and economic downturns. While metals don't generate monthly cash flow, their value often rises during uncertain times. Holding a portion of wealth in precious metals provides a safety net against market volatility. For those playing the long game, this investment protects purchasing power while offering potential gains. Number 12. Art and collectibles. Fine art, vintage watches, rare coins, these aren't just collector's items. They're assets that appreciate over time. Investing in art or collectibles requires patience, but the right piece can bring significant returns. Unlike traditional stocks, these assets often gain value due to scarcity and cultural demand. High-profile auctions prove that rare items can sell for fortunes, turning passion into profit. Those with an eye for value can build wealth through carefully chosen pieces, adding a layer of uniqueness to an investment portfolio. With research and smart acquisitions, art becomes more than just decoration. It becomes an income stream. Number 13. Agricultural land. Farmland doesn't just sit there, it earns. Crops grow, livestock graze, and investors collect rental income without lifting a shovel. Farmers lease land, handle operations, and generate profits, while owners benefit without the day-to-day work. Demand for food never disappears, making agricultural land one of the most reliable long-term investments. While property values fluctuate, land itself holds its worth better than many assets. Some investors buy directly, while others invest through agricultural funds, allowing for ownership without full-scale farming responsibilities. With population growth pushing food demand higher, farmland remains a steady and profitable asset. Number 14. Startup equity. Backing startups means getting in early on companies with potential to skyrocket. Platforms like AngelList and Seed Invest connect investors with businesses in need of funding. Returns vary, some startups fail, while others bring in massive gains. The risk is real, but so is the opportunity to own a piece of something big before the rest of the world catches on. Tech, healthcare, and consumer products see the most activity, but niche markets often deliver surprising success stories. Smart investors research founders, business models, and market trends before committing capital. A single successful bet can outperform years of slow, predictable investing. Number 15. Digital real estate. Owning websites, domain names, or online rental spaces generates income just like physical real estate. A well-ranked website earns through ads, sponsorships, or affiliate marketing, bringing in money without constant updates. Domains appreciate in value, with companies paying thousands to acquire the right one. Some investors purchase undervalued sites, improve their revenue streams, and sell them at a profit. Virtual land and metaverse platforms also attracts buyers willing to pay premiums for prime locations. The internet isn't slowing down, and those who control digital spaces continue seeing returns without the maintenance headaches of traditional real estate. Number 16. High-end art investments. While paintings hang on walls, their value climbs. Collectors and investors target emerging artists, limited editions, and rare pieces that appreciate over time. Unlike stocks, fine art isn't tied to market swings, making it a hedge against inflation. Some hold artwork for decades, while others sell strategically when demand spikes. Art investment platforms now allow fractional ownership, giving more people access to blue-chip pieces without needing millions to start. Patience matters. Timing a sale right can turn a piece bought for thousands into one worth millions. For those with an eye for value, the art world offers more than just aesthetic appeal. Number 17. Storage unit rentals. People accumulate stuff, and that stuff needs a place to go. Storage units fill that need, providing a low-maintenance way to generate monthly income. Unlike rental properties, tenants rarely complain, and turnover requires little effort. Some investors purchase facilities outright, while others buy shares in storage rates. Demand stays consistent, fueled by downsizing, temporary moves, and small businesses needing extra space. With minimal upkeep and a steady stream of renters, storage units rank among the simplest forms of passive income. As urban areas grow and living spaces shrink, storage remains an in-demand industry with reliable returns. Number 18. Resort rentals for arbitrage. Owning a resort property and leasing it to rental operators turns vacation homes into cash machines. Operators handle bookings, maintenance, and marketing, leaving owners with steady income and fewer responsibilities. The luxury travel market keeps expanding, with travelers willing to pay for unique, high-end stays. Locations with strong tourism pull in high occupancy rates, making short-term rentals more profitable than traditional leasing. A well-positioned resort rental generates significant revenue, all while offering owners a vacation home they can use when needed. With demand for travel surging, premium properties continue attracting steady rental income year-round. The smart way to build wealth. Money doesn't have to come at the cost of time. Passive income puts your cash to work, so financial freedom isn't just a distant dream. Some methods take patience, others take upfront investment, but every option on this list creates income without daily effort. The key is stacking strategies that fit your goals, letting wealth grow in the background while life stays front and center. Smart moves today mean more choices tomorrow, more time, more security, and more freedom. The best time to start? Right now. Thanks for watching, and if you found this video helpful, don't forget to like, subscribe, and share it with your friends. Also, don't forget the link in the description.